Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. Welcome back to the show, Bob.
Yeah, Jim, it's good to be with you, and I guess with our listeners, too.
Friday morning, both the Canadian and U.S. stock markets plunged rapidly. So many people pointing the finger at Michael Flynn, the former U.S. security advisor who resigned and now has decided to plead guilty to lying to the FBI. But I wonder, what does that have to do with financial markets?
Well, you've had the Trump revolution going on. I would prefer to call it a reform, whereby the financial markets view his administration as being pro-business, which is really quite startling because by way of change from the Obama administration, which was probably the most anti-business administration in U.S. history. So the big rally, which has been huge, is founded upon the prospect of less government and a more rational tax system and more prosperity. And that has been the great stimulus. Mind you, in December, a year ago with the party, and because it was discounting a pro-business administration, we called it rational exuberance. And then when we got out to June and the technicals were getting excessive, called it just plain exuberance. And then of late, with this really incredible move, which we're not fighting, by the way, just measuring, we've been calling it irrational exuberance. And just so the other thing that we picked up on in August, I guess it was, I started writing that there seemed to be, beyond the party and the financial markets, that there was sort of a positive wave coming through on the business side, and I wasn't sure whether that was due to the potential reform, the positiveness of a pro-business administration. And it was just yesterday I saw something coming out of Europe that their economy in Europe is looking the most robust in some years. So this positive wave is probably outside of the U.S. economy, namely in Europe. So this is momentarily constructive because the financial markets are moving on their own. And our October 4th edition, we looked around, and this, September's the time when if something's going to go wrong, it will go wrong, and it wasn't happening. We just said, as a matter of fact, things were starting to get pretty excited in an anticipatory sort of way. So the conclusion was, and wrote it out, that it looked like even the Dow Jones Industrial Index could get bubbled. And indeed it has. I mean, it's been flying. So then, again in that early October edition, said if it does bubble, how long will the bubble last? And said they run until they quit. Then put in that there are some examples of really big stock market or financial speculations completing close to the turn of the year, and listed them off with the New York stock market reached a peak in January 11th of 1973, and the worst bear market since the 30s followed right until late 2000 or 1974. Then you had the gold and silver mania, which peaked on, I think it was January 21st or 22nd of 1980, and then went into a severe bear market. But that was a commodity. Like we just looked at it in the last 2 months of that rally. Gold went in the 400s to 850 just in 2 months. It was spectacular. And then you had in Tokyo the Nikkei speculation that it went up and ended right on the last trading day of 1989, and then a prolonged bear market. So this is not to say that it's going to happen this time, but it gave us a target to look for, and the speculation is brewing up. You're getting some fabulous moves. Sentiment numbers, bulls minus bears, or the bulls divided by bears is up to, it was 4.40, and that measure has not been that high since 1987. That's a long time ago. And then you've got the valuation measures. Now, this can be tricky because you have a whole industry out there, financial and stock analysts, and their job is to make the stocks look attractive, so they have very good forecasts for next year. So if you look at it on a price-earnings multiple, they can put forward-looking at almost any level they want. But the one I kind of find interesting is where you take the average American wage level from the Bureau of Labor Statistics and divide it into the S&P. So you end up with how many hours of work it takes to buy a unit of S&P, and it is now materially higher than reached in the wild market of 2000, and quite a bit higher than reached in 2007. So you have a valuation model that I respect, and you have sentiment numbers that are exceptional, and these exceptional readings only occur close to major market peaks. But what you're looking back on, Jim, here, and we had some pretty strong technical readings in June, and then you're even stronger going into September, and then even stronger now. So on each rally, the technical measures are getting more stretched, and at some point it breaks, and who knows exactly when. On the continuation side, you've got New York Stock Exchange margin debt, which has been soaring because people are getting leveraged, and that's the October number. It just came out this week, and it was an uptick. So on that one, the stock market can continue up even after you get the first downtick in margin outstanding. So there's a little more elbow room there. So it looks like it wants to play, except as you opened with, there's some wild volatility on this Flynn agreeing to work with the Department of Justice. And of course, it's this Mueller investigation, special counsel or whatever. And of course, it's all packed with Democrats who are out to get rid of Trump. So I think my guess is he may weather it, but it did put a sharp break into the stock markets earlier. But in watching for the real things that would anticipate an end to this magnificent speculation is we'd look to the credit markets, and nothing too alarming there. We'd look to industrial commodities. They've sort of stopped going up, which is sort of a signal, but not an alarming thing. So there's things like that. Oh yeah, the gold-silver ratio, that one is, we call it the metallic credit spread, and it's upticking, which is an alert to whatever speculation is going on is becoming pretty ripe. But who knows what can be done over the next 4 or 5 weeks on this thing. So, but fortunately we have ways of watching, particularly in the credit markets, that would anticipate the end of this huge thrust in the stock markets.
We'll have more with Bob Hoye right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com. Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
Welcome back. We're chatting with Bob Hoye. Bob, after the excitement on Friday about the Flynn decision to plead guilty, do you expect the markets to stabilize again and perhaps continue to rise?
Yeah, I think so. This thing has a power, a remarkable power, and a couple of indicators are not yet saying, get out of Dodge. As a matter of fact, a lot of the players are eagerly going into Dodge rather than getting out. But it's had an effect on the precious metals side. And we look at the standard research from so many gold bugs, and there is one guy who has quite a high name, and he seems to every once in a while put in that he has some unique connections to the CIA. And whenever there's a rally in gold, he comes out with a $10,000 target. These guys don't seem to see that, yes, the Fed is eased credit enormously, but if you'd learned about precious metals in the 1970s, which these guys seem to have done, you then put in immediately that's going to drive gold up, or if you're a silver bug, it'll drive silver up. But they don't seem to understand that the credit is inflating, but not against precious metals. It's inflating where the action is, which has been in stocks and bonds. And if you look at the great bubbles in history like 1929 or 1873, in the year that the bubble concludes, or going into that, the real price of gold has declined. And I looked at this yesterday, and the real price, by that I mean you deflate it by the consumer price index or by the producer price index. And it's been coming down ever since the big blowout in gold and silver in 2011, which was measurably excessive. So what you have here now is, it's a classic, a great bubble in the financial markets, and the gold sector underperforms. It's the way it works. So what, if we look at previous examples, is going to happen is that when this market breaks, it'll be a credit convulsion, a severe one, that won't do the gold stocks any good. But when you get precarious markets, the very careful money goes to the most liquid items, and they don't care for return, just a place where you can park money and get it back out in an instant. Of course, gold is very liquid, and the U.S. Treasury bills are very liquid. So then in a storm, you could see the investment demand for gold going up, but that may not, if the world is buying U.S. Treasury bills for liquidity, that would put a bid into the dollar. So I can't see in a storm whereby you'd get a big move in gold's price in dollars, but if the dollar firms up, you would get a move in other currencies. But the main thing is that after, in the post-bubble contraction, in the past, previous ones, the real price of gold has gone up and profitability has gone back into the business, and you've ended up with a very good bull market in gold. So this is what we have ahead of us, Jim, and I looked what I call our comfort indicators for whether one wants to position the gold stocks or the silver stocks, and they're not yet comfortable. So we wouldn't be buying yet. But at some point, perhaps in the new year, if we go into a credit storm, out of it would come a new bull market for the gold and silver sector, which would be welcome because it's been a long bear market for the sector ever since 2011. So then next year, the precious metals market would more than likely start a new bull market.
We'll have more with Bob Hoye right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Bob Hoye. Bob, Bitcoin mania sweeping the nation, the globe, and everybody's asking me, is this for real? Is it something that you have to get into, or is it so monstrously unstable it could disappear in a moment?
It's all of that. Sure, we've been following it, but not recommending it in the early days. It just didn't focus on it. However, as it has progressed, the conclusion I've had is that the world needs a sound currency. It needs a sound currency that central bankers and economists can't meddle with. And the world will end up with it. I figured that at some point the public would force each country to go back to a gold standard. That's one way of doing it, but there could be something more sophisticated going on between Bitcoin and the, what's the thing about they're doing with a computer? Can't think of it now, it just escaped me. But anyways, and somehow the markets will demand it, a sound unit of that you can calculate with, that you can hold well, a storehouse of wealth, all the things that gold holds and represents, and somewhere it'll do it. So, and this could be part of it, but the moves in these things are outstanding, but they're similar to the moves in gold and silver in going up to 1980. You've had similar excesses. Even just a couple of days ago, we didn't publish the chart, but Ross came up with it, and it was showing, again, exceptionally high upside exhaustions. Then in comes a correction. But unless you're a wizard short-term trader, very hard to do. So I, at this point, say that this is now exceptionally speculative. And on each rally, it's getting up to excesses and then these wild corrections. And it'll eventually, the world requires a currency that cannot be corrupted by corrupt central bankers. And somewhere in this madness, we can end up with a sound currency with only modest changes in the purchasing power of it. And the financial world will be a whole lot better off for it. I'm looking forward to it.
Bob, thank you so much for chatting with us.
Yep, Jim, good to be with you.
My guest has been market historian Bob Hoye. He's the chief investment strategist for institutionaladvisors.com. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. You can forward questions to info@HoweStreet.com, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.